get a sense of what to expect. Joining us now is Gilbert Joekpata, financial market analyst. Great to have you on the show, Gilbert.
Yeah, great to be here. Good afternoon, Mr. Ladi.
Fantastic. I know you keep tabs on the U.S. markets, but how much volatility should we expect this week as U.S. Fed will have its last rate-setting meeting for 2023? Do you think the U.S. Fed, how do you think they've done, when it comes to bringing down inflation?
Okay, first of all, I think it's easy to gauge what the Fed share will do next, or even sentiments in the market, because we have enough data out there. First of all, the Feds were left with an inflation as high as 9%, which is the highest that have been seen in about 40 years. And they have brought inflation down to about 3% with the last CPI numbers. And we also have enough data. I believe there's enough data for us to price in what we should expect. And in terms of sentiments in the market, we also have the PCE number came out at about 3%. We also had a job number claim, increased that to over about 199,000. And these are all strong numbers in regards to inflation coming down from about 3%, from about 9% to 3%. This actually shows that the Feds are actually winning the war against inflation. But then what should we really expect coming tomorrow? So far, there is enough data out there for us to anticipate what we should expect tomorrow in regards to inflation numbers. And why most persons are thinking, because of the new job claims, an increase, which was quite strong, the PCI number as well, that we are going to see. Most persons think the Feds are done with increasing interest rates. But I actually think this is not really the case, since the Fed have reiterated over and over and over that they will do anything that they can to keep bring inflation down to 2%. So I think what we should be looking at more as we move into the Fed meeting tomorrow, it's more of, I think the rates will be left unchanged. Yes, there'll be increase, but more of rates being left unchanged. And why I think that if we are not seeing rates being left unchanged, we should rather have lower numbers. But obviously, the Feds are right now done with aggressive rate hikes so far.
Looking at the inflation rate right now, the Fed, is winning at this point. So going into 2024, do you still see the rates trending, the inflation rates trending downward into 2024?
Okay, moving into 2024, I'm really looking at two things. First of all, the Feds may have to keep rates steady. And for us to be sure this will happen, we need to look at the CPI numbers. If the CPI numbers is not declining more than what we have right now, we will see the Feds hold rates steady for a while. But once we start seeing numbers going down, inflation numbers lower than 3%, then obviously we'll start having rate cuts. The rate cuts will really come in, and I think it's high time the Feds really start thinking about rate cuts. But for us to be sure about this, we have to look at inflation numbers. And so far, there's enough numbers out there for us to know that moving into 2024, yes, I still expect a couple of interest rate hike, but we should be seeing lower numbers as we move in 2024.
Right, Gilbert, for me, I feel like I'm so used to rate hikes at this point. It'd be quite interesting seeing rate cuts at some point, but I'm definitely going to be looking out for that. But let's look at the crypto market now. We're seeing, Bitcoin has done pretty well, in 2023. What are you seeing when it comes to reactions now to the last meeting, the last Fed meeting for this year? Do you see a lot of volatility coming for the crypto market, or do you see Bitcoin falling from over $40,000 down?
Okay, first of all, crypto was first of all the first incidental victim of the aggressive rate hike which began by the Feds. And crypto also stood very greatly to benefit from a less aggressive rate hike, which made macroeconomics being friendly for crypto. And then we saw a major rally from the $24,000 to 30K. We got another rally from 30K to about 37, 38. And then another major breakout that took us to about $45,000 so far. But if you notice the kind of race that Bitcoin has taken, Bitcoin is due to relax. If you're running a sprint, it takes more energy. After you run for a while, it's about time you take a rest. So Bitcoin has done a major run, and the 45, 47K was a major resistance for Bitcoin. And finally, it's taking a rest. Moving into the meeting which will be taking place tomorrow, there is one thing I know. It doesn't matter what price action or market structure of Bitcoin will tell us. A strengthening dollar is not a friend to the cryptocurrency market. So if we see rates being left unchanged, the market may just react just slightly, very, very slightly bearish. Probably we may break below 40K, but then I still think the market structure for Bitcoin is very, very strong and can withstand a moderate rate hike or leaving rate unchanged.
Yeah, definitely consensus might be unchanged at this point for the U.S. Last rate hike for the year or last rate setting meeting. So we'll see if it's going to be unchanged. Thank you so much, Gilbert Joekpata, financial market analyst. Thank you.
Yeah, thanks for having me, Mr. Ladi.